Well, it's the end of the month again, and that means it's time to check the pulse of our property markets. And what a month it's been. House prices are still rising, confidence is clearly returning, and the impact of those recent Reserve Bank interest rate cuts seem to be showing up in the data. In today's episode, I'm joined by Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, to unpack his June 2025 housing report. We're going to explore what's driving these price surges, what cities are leading the charge, and what this means for investors, home buyers, and the broader economy. So if you're wondering what our housing markets are heading, where they're heading, this episode's for you. But before we get going, if you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and hit that little bell icon so we can let you know when our weekly shows come out. After that long introduction, hello, Andrew.
Yes. Hello, Michael. And another positive. I guess it's the end of the year, isn't it? The end of the financial year.
Yes.
So we're heading to the end of the year now in terms of the calendar, and the first part of the year has gone quickly. And
Boy, has it gone quickly.
yes, it has been another very positive result for our national housing markets over June. This is the June quarter compared to the May quarter. And, we shouldn't be surprised, of course, two interest rate cuts this year, one in February and then the follow-up in May, has certainly charged housing markets, improves confidence, improves affordability. And for some markets, particularly the boom markets of Adelaide and Perth, it probably came just at the right time, to refuel those markets. And we're seeing the results of that with some good price data. I guess good if you're a home owner, not so much if you're a first home buyer, but certainly prices are continuing to rise. And I think the prospects are, that they will continue to rise over the second half of the year. It's, I guess, an unknown where interest rates are going to go. We've had those two cuts, as I mentioned, this year so far. Whether we get another cut shortly, I'm not too sure. The Reserve Bank tends to be more about, I guess, has a bias towards lower rates rather than steady. So we'll see when that decision comes. But nonetheless, lower rates have certainly refueled housing markets and onwards and upwards.
Well, it's increased confidence. So it's not just the lower mortgage costs and there is slightly extra affordability. It means people think, well, the worst is over. I'm not going to get caught with rising rates. I can start buying with some certainty. And there definitely has been confidence in the markets with depth, as you report every week in the auction clearance results. But let's go through state by state. Let's start with houses first. How have our housing markets performed, Andrew?
Well, the national capital city median house price, Michael, this is a weighted average, of course, of the capitals, which is based on the activity in each of the capital cities. So, of course, it does favour the larger capitals of Melbourne, Sydney and Brisbane. But it was up 1% over the June quarter.
If I could just explain to people who are new to this, you take quarterly data to get much larger sample sizes to make your sums more accurate, but it's actually been the June quarter over the May quarter. So it's really a monthly increase that you're talking about.
Yeah, it's a rolling model, Michael, which gives us, as you said, the depths of observation, so we can eliminate some of the volatility that is inherent in house price modelling. But we can move it from month to month, so we can see that underlying trend emerging clearly as the data comes in. So it was the highest monthly result, that 1% increase in the national capital city house price was the highest we'd recorded since March 2024. And it gives us, again, 5 consecutive increases in house prices this year so far, monthly increases in house prices so far this year, Michael. So a very positive result. And house prices are now up 5.6% over the year. So that's a 5.6% increase. And I think that it wouldn't be too heroic to suggest we'll get a very similar result this year to what we had last year, which was a 7% increase, and the year before, which was just under 8% increase. So we're going to get 3 years in a row, a little above the long-term average in terms of prices growth. So it's been a remarkably stable period the last 3 years. And but as I said, lower interest rates are certainly producing the results that we're getting, particularly over the last couple of months.
So it produced another effect. The property pessimists seem to have disappeared. They've gone into their caves and hibernated at the moment because despite all the challenges that have been thrown to our housing markets, they've been very resilient, haven't they?
Well, they have, Michael, but we shouldn't be surprised at that. The average long-term growth in Australia's capital city house prices, and I'm talking the 40-year trend, is around about 6.5%. So we're sort of right on average the last, or just a little above average the last 3 years. Remarkably consistent. And I guess that's what we inherently understand when we invest in property, is that longer-term consistency that we get in terms of growth.
There were some surprises this month. I know over the last couple of months, Perth seemed to be
Yes.
languishing a bit. Adelaide seemed to the darlings of the market last year. But your figures that we're showing here now show, well, Perth in particular was the strongest performance over the month.
Yes, Michael, earlier in the year, we were a little surprised at how the Perth market had come off the boil. Of course, it was Australia's strongest capital city market over the past 2 years. Very strong growth in that Perth market. Of course, if we look over the longer term, it is coming from a bit of a long way back. It had a significant period, a lengthy period of underperformance over the last decade or so, but back in town last year and the year before with strong boom time growth. But it did certainly ease towards the end of last year and into this year. Affordability barriers really were the cause of that as prices rose, and I guess a lot of buying activity was satisfied, as well as higher prices started to push some buyers out of the marketplace. Lower interest rates have improved affordability in Perth, and it's come roaring back over the past month, particularly up by 2.2% over the month. And that was the strongest growth rate for any of the capital city markets, Michael. Number two was Brisbane, which hasn't had the same sort of profile in terms of a revival. Brisbane just keeps on keeping on. We've seen lately the latest migration data, which still favours Queensland. And I think that's part of the story that's driving that Brisbane housing market onwards and upwards now. 2.1% increase over the month for Brisbane. And it has been remarkably consistent. As you mentioned, Hobart just under 1% there at, Adelaide just under 1% at 0.9%. It too is been reviving after a quiet end to last year and the beginning of this year. And that's something also we've been picking up on, an improvement in the Adelaide auction market as well, which has been a clear foreteller of this improvement in prices growth in Adelaide. Smaller markets, Hobart and Darwin, had good results. 1.3% increase in Hobart over the month, 1.1% increase in Darwin. And the only negative there was the Canberra market, which fell by marginally by 0.7% house prices over the month in Canberra. Sydney and Melbourne, similar results there, up by 0.6% in Sydney and 0.5% in Melbourne. The annual data is quite interesting, particularly when we look at Melbourne, Michael, because Melbourne has been an underperformer in terms of annual prices growth. But now we're starting to report higher prices over the year in Melbourne. And that's the first time in some time that the Melbourne market has been in the black in terms of annual growth in house prices. So certainly the trends are continuing upwards for Melbourne. And Sydney, same old, up by 4.5% over the year. And that rebound from Perth is pushing it again to the top of the ladder in terms of annual prices growth, up by 11.6% in Adelaide and Brisbane, not too far behind, just under 10% prices growth over the past year. So a little bit of the same as we have been seeing over the last couple of months in house prices, Michael, but certainly reinforced by those lower interest rates. Of course, we are coming up to the quieter mid-year market period. There will be some seasonal effects, but certainly we must consider that the housing markets remain quite heady, quite frothy, I think can be called, in terms of their activity levels, and another good result for homeowners over June.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, apartments have become a bit more popular because they're a bit affordable. But despite that, having said that, the apartment figures that you've produced for the end of June haven't been anywhere as strong as the growth that we've seen in houses.
No, that's right, Michael. Reasonably consistent. Certainly, growth has been what you'd call solid to positive growth in most of the capital cities over the month. Again, Perth led the charge, Michael,
Yeah.
rebounding Perth market with unit prices up by 2%. And very even results there in the other major capital cities. Sydney and Brisbane up by 0.7%. Adelaide up 0.8% and Melbourne up 0.5%. And over the year, similar to houses, the Melbourne market is now back in the black in terms of annual growth in unit prices. So, as I mentioned, the auction market data that we produce every week has clearly shown a revival in that Melbourne housing market this year, and it's being translated into stronger growth in prices and certainly now positive growth in annual prices growth in Melbourne for both houses and units. And if we could just notice again or note on the annual results that Brisbane market, not only for houses but also for units, is remarkably positive. Over the past year, Brisbane remains the strongest market for units, annual growth of 15.8% for Brisbane units, which that Brisbane market just shows no sign of slowing down, Michael. And it wasn't too long ago that the so-called pundits were predicting a shakeout in the Brisbane unit
Yeah.
market due to overbuilding. That's really been quite a ridiculous forecast, given just how strong that Brisbane market has consistently been over the last few years. Again, as I mentioned, up by 15.8% over the year, unit prices in Brisbane. And even over the past 2 years, Michael, Brisbane unit prices are up by 45%. So
Wow.
that's a pretty fair dividend if you're a Brisbane unit owner.
Well, that also means that with higher unit prices, it's going to make it more financially viable for new developments to start occurring in Brisbane, where it's not really as viable financially in other states where it just costs too much to bring new stock into the market. Having said that, all the other underlying fundamentals are strong. We keep repeating it every month, but it's
Yes.
basically strong immigration. Yes, it's slowed down a little bit from the post-COVID booms, but we're still getting a lot of people coming into this country needing accommodation. A strong jobs market. Anyone who wants a job can have a job. There's been strong jobs growth recently, higher wages, higher minimum wages, enhanced by interest rate cuts, giving us a bit of extra confidence. All this is pointing to a good second half for 2025, Andrew.
Yes, you're right, Michael. The fundamentals are the same old, very much in favour of demand over supply, and that means higher prices. I think that shakeout in migration, and that's probably overstating it. We've just eased our high migration. And part of that is government policy driven, of course, because they've reduced the number of international students coming in. I think part of that was significant concerns over the accommodation in the rental market. And that was probably worked to some degree because we have seen an easing in rents over the past 6 months or 12 months or so, which reflects those lower levels of international students to some degree. But on the demand side, we still have way too much demand for the supply. As we report every month, Australia's supply lines for housing are still very much underperforming, and no sign of a revival really in either house or unit construction which is sort of needed really
Yep.
to offer some more balance in our housing markets. Else we just continue to see higher prices, and again, eventually we'll start to see higher rents again.
Well, interestingly, at the beginning of this year, you made some predictions about the market, and I think you're going to find that many of those are going to be pretty accurate at the levels. So not the double-digit growth we enjoyed a couple of years ago, but steady growth that is sustainable, and that's good. Well, thanks again for the update. It's good news for those in the market, and I think it gives the message to those sitting on the sidelines. Don't wait for the timing to be right. Don't wait for some special message that this is the time to get in the market. If you can afford to, it's never going to be cheaper, is it, Andrew?
No, Michael, and that's the story. As I said, long-term growth of 7%, just under 7% over 40 years, and we're looking to do that again this year.
Fantastic. Look forward to catching up with you again next week, Andrew. Thank you.
Thanks, Michael.